Now that we've analyzed both GO and revenue bond issuance, let's discuss shorter-term municipal securities. The maturity of a municipal bond, whether a GO, revenue bond, or otherwise, is one of the most important features for buyers to consider. Similar to corporate and government debt, the longer the bond's maturity, the more exposure that bondholder has to interest rate risk. This means there's a greater chance rates could rise if the bond is scheduled to mature in 10, 20, or 30 years compared to shorter dated notes. There are, of course, other factors that may present downside risks to the bond's performance, and these will also have a higher probability of occurring the longer the bond is held, such as a rating downgrade or default. For those bond investors seeking shorter dated notes, say about a year in length or less, some examples in the muni market include TANs, RANs, TRANs, and BANs. Let's take a look at what these acronyms mean. Buyers of tax anticipation notes, or TANs, usually invest in a GO-related project which is financed in anticipation of future tax receipts, typically from property. Let's say a local government has come up with a $6 million budget to build a public park, the development of which is slated for June 2017. But the city only has $4 million in available funds. Local officials may eye the taxes it will receive from businesses and individuals after the tax filing deadline in April of the following year and issue $2 million in TANs with a May 2018 maturity. RANs are revenue anticipation notes. These are very similar to TANs, but the project funding is usually pegged to the anticipated revenues of federal or state subsidies. Now, if you bundle TANs and RANs together, you'll get a tax and revenue anticipation note, or TRANS. BANs are bond anticipation notes. Here, the project financing relies on the future sale of long-term bonds. Virginia's Chesapeake Bay Bridge and Tunnel District, for example, has sold first-tier general resolution revenue bond anticipation notes in large part to help finance its parallel Thimble Shoal Tunnel project, as well as pay capitalized interest on the issuance. The BANs, issued as interim financing for that project, were expected to provide interest cost savings. More complex short-dated municipal securities include auction rate securities, or ARS, which are long-term investments with interest rates that reset over short-term intervals via auctions. Now that we've covered some of the more typical types of municipal bonds investors are likely to encounter, we'll turn our attention in the next lesson to some of the more critical players in the muni market ecosystem, including bond guarantors and credit rating agencies.